Hello and welcome to another MCO market update on ADA. Well, we actually start to have a really nicely defined D wave, I think, visible here on the chart. I mean, as I said before, there isn't really any, there isn't really any clear, let's say, setup right now. Yeah, there is no clear setup. There's nothing really that would, from an Elliott wave point of view, let's say, be really interesting to trade from a pullback perspective. However, obviously you can use the levels to trade it. It's just that this is just a consolidation pattern from the December high. So we have a three-wave move down, we have a three-wave move up, we have a three-wave move down, we expected a three-wave move up, and next there could be a three-wave move down in the E-wave. So be ready for that before we then go higher in the fifth wave. This here would be seen as a fourth wave, and this is only a thesis. I mean, nobody can, no, I'm no prophet, right? I'm no prophet. Um, Profit, yeah. I'm no prophet. Profit? You know what I mean. It's all about understanding there is a clear level that will invalidate this white scenario. And the white scenario is obviously the bullish one. So, the white scenario is the one that is an internal consolidation in a larger five-wave move that started down here in August. So as long as the market holds above this level, 51 cents, the focus can be on higher prices. It's a very, very clearly defined level. There's an invalidation point. And you might ask, why is this level so important? Well, it's important because the triangle rules just tell us very clearly that the market must not break below the C wave low in a triangle. So that's very clear. And a double bottom here is acceptable in a triangle, but the market must not go any lower because, for example, in the E wave, yeah, this would not be a valid triangle. I can't have an E wave below the C wave. It is just based on what a triangle is. It's a series of higher lows and lower highs. So that's why this is so important. But I've been very clear about this. So already weeks ago, when the price started this rally here, yeah, around the 7th of April, right? We said this is the last chance for the C wave to have found a low. So from a trading point of view, those who were interested, it can make sense to set a stop below the low, okay, and then see what happens. And the market followed that D wave projection we've been watching. And that means, I mean, we're probably not there yet. That D wave could stretch a little bit higher somehow, and then we could get an E wave pullback afterwards. So that's the idea. Some people ask me, can you give me a target for the E wave? I can't. So first of all, within a triangle, within a consolidation, you don't really have clear targets. There will be levels to watch, but really only when we have the D wave completed. Yeah. Then we can track the target, let's say a so-called target for an E wave. It's not the same as a target like a mathematical projection in a rally or something, which is more clear. It would more be something like, it's just an area of interest or something. So I think what now needs to be understood is that if we break below 51 cents, what would be the next area to focus on? And below that, we've got this area between 35, 36 to 29 cents as next additional support area. Okay, so this would be, if we break below 51 cents, we might break back into the area of previous swing lows around November, September, October. Now let's take a look at the shorter time frame. I don't think there's anything new here. In yesterday's update, we talked about I think yesterday when I recorded the update, where price was just in this support zone, and we talked about the potential for the price to rally in a fifth wave. Well, it kind of did that. Good reaction to Fibonacci support, which was defined here. I will leave it on the chart right now because it might still be relevant. So could be tested once more. So we had a couple of setups here. I mean, I'm saying there was no setup. I mean, there were setups, but only really on the smaller time frame and no high quality setup. So there was no, five-wave move up anywhere, no impulse, and then that was followed by a corrective pullback. That's what we normally want to see. The rally also here into the Sunday, the 13th of April high, the rallies were only corrective in nature. So there were only 3-wave movements. So there was no 5-wave pattern in any way. So yeah, no high quality setup. Because this is what we're normally looking for, right? From an Elliott wave point of view. Do we get 5 waves into a direction? If yes, then the next pullback should form a higher low. Now, in this case, we relied more on context and levels. Also here, so this is just all based on a messy C-wave diagonal. I shared with you that if we react here to Fibonacci support, we should get very, very close to the end of this rally. Very close. Because then now, as you can see, we have 5 waves up. I could call that complete. We have the 5 waves up I wanted to see. Okay, so for me, the wave count is now full. For me, this has now fulfilled all minimum requirements. The C wave is a 5-wave move. I'm happy. But we haven't reached the 78-cent level. So because I'm a perfectionist, sometimes at least, I'd like to see the price get to the 100% extension. I know. Do we have to get there? No. But there could be that one more high, just because, I mean, one more high is part of the rally that's already unfolding. Because, as you can see, the third wave is an ABC structure. So we could say this might be an A wave. Somehow it's now forming a B wave, and then there could be a C wave. That's not high probability. I'm just saying, look, until we break below yesterday's low that formed at 67 cents, I see the potential for maybe even one more high, one more rally potentially as part of this 5th wave, just simply because it hasn't quite reached the ideal 100% extension, which doesn't have to be reached, but yeah, it would be ideal. Let me just delete what we don't need anymore so we have a bit more space. Yeah, so this would be micro support for B. Okay, so that's what I'm tracking. If we see a reaction here today, then maybe that would be the start of the rally to 77, previous swing high, and 78 cents, 100% extension. That's the update on ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.